Hey there, it's great to have you here with me today on Money Mechanics. Imagine you're sitting at your kitchen table, opening your mail, and there it is, your annual insurance renewal notice. The premium has gone up again, and you wonder why. What's really going on with these companies that promise to protect us? Well, today I want to share some of the most interesting, lesser-known ways insurance actually operates. These mechanics affect every part of our financial lives, from our cars to our homes to our health, and once you see them clearly, you'll feel way more in control. Let's start with the foundation, the risk pool. Thousands of people pay premiums into a shared fund. And when someone experiences a covered loss, the money comes out to help them. It's powered by what mathematicians call the law of large numbers. The more policies in the pool, the more predictable the payouts become. Companies analyze massive amounts of data, weather patterns, accident statistics, health trends, to set prices that keep the pool balanced. For you in everyday life, this means your rates are based on group behavior as much as your own actions. But here's the empowering part. By taking small steps like installing home security systems or taking defensive driving courses, you can stand out from the average and often qualify for discounts that pull your costs down. Watch this in action as we visualize those numbers flowing together on screen. It's pretty remarkable how it all balances out. Another quietly astonishing piece is how insurers determine your specific rate using what's called an insurance score. It looks at your bill-paying history, outstanding debts, and more, similar to but separate from your regular credit score. In many places, a better score can mean noticeably lower premiums for auto and homeowners insurance. It's not about punishing anyone. It's about predicting risk based on patterns that have played out for millions. One friend of mine improved his score by focusing on his finances, and it saved him hundreds on his car insurance. Knowing this encourages you to keep an eye on your full financial picture. Now let's talk about where your premium dollars really go. Insurers don't just hold the money in a bank account. They invest it. This is known as the float. The premiums come in today, claims get paid months or years later. That gives them capital to invest in markets, and smart management of this float has helped build some of the biggest financial powerhouses around. It creates a strong motivation for them to accurately assess risks. Next up, when it comes to property insurance, pay close attention to whether your policy is actual cash value or replacement cost. Actual cash value accounts for depreciation. That 10-year-old roof or appliance gets valued at today's used price. Replacement cost covers the full price to buy new ones. Switching to replacement cost might cost a bit more in premium. But during a claim, it can make a world of difference in what ends up in your pocket. Picture the before and after of a home restoration. It's night and day. Here's one that provides serious protection with surprisingly little cost: umbrella liability insurance. For a few $100s a year, you can add $1 million or more of extra coverage that sits on top of your regular auto and home policies. In a world where lawsuits can come from unexpected directions, think a guest slipping on your walkway or an accident while driving. This extra layer acts like a financial shield for your savings and assets. As animations show smooth coverage expanding over a family home and car, you can see how it brings real security. With technology changing fast, usage-based insurance is gaining ground. Through a smartphone app or small device in your vehicle, insurers can monitor actual driving behavior: how hard you brake, your speed, even the times you drive. Safe drivers often see significant savings. It moves away from averages to your personal habits, rewarding good decisions in real time. And for our fascinating money fact of the day, insurance as we know it got a major boost after the Great Fire of London in 1666. That disaster destroyed over 13,000 houses and led to the birth of organized fire insurance companies. Today, the industry protects trillions in assets worldwide, all evolving from lessons learned centuries ago. Who knew one historical event could shape how we safeguard our modern lives? One more key mechanic: the principle of utmost good faith. Insurance contracts require honest disclosure from both sides. You provide accurate info when applying, and the company must fairly interpret the policy. This builds trust in a system that handles enormous sums. Putting it all together, these behind-the-scenes workings show why insurance isn't just a necessary expense. It's a sophisticated tool for managing life's uncertainties. Taking time to understand your policies puts you in a much stronger position financially. I'd love to know from you. Have you ever discovered something surprising about your insurance after a renewal or a claim? What's one change you've made that affected your premiums? Drop it in the comments below. I read them, and it helps us all learn together. Thanks for hanging out with me today. Keep asking questions about how money really works. And I'll see you in the next one where we explore another practical financial mechanism. Stay safe and smart out there.